Garden City Mall, Villarosa Hotel, Kempinski Hotel, the State House. Now, I'm sure you're wondering what all these are. These are some of the finest structures and buildings that we have in Kenya, and they have been built using Bamburi cement. And I'm almost certain that most of the companies we're analyzing here today have also been built using Bamburi cement. So you need my company. We shape your buildings as your buildings shape you. So join Bamburi Cement, Precious Blood this morning. My name is Ivy Komboka.
My name is Lynette Mwangi.
My name is Tracy Ogutu.
My name is Rosalind Gidhua.
I'm Maisara Gulam.
So about the Bamburi Cement Company. Bamburi Cement Company is a subsidiary of Lafarge. It is the largest cement producing company in Kenya and Eastern Africa. It is also the second largest cement producing company in sub-Saharan Africa. So we'll move on to the history of Bamburi Cement.
Okay, so Bamburi was started in 1951 by Felix Mandley. By then, Bamburi was known as Cementia, and later Cementia partnered with Blue Circle, and Lafarge acquired Cementia to become an equal shareholder with Blue Circle. And after that, later Lafarge decided to acquire also Blue Circle. And so today, it becomes Bamburi Cement, and Lafarge is the major shareholder with a percentage of 58.6%. And the initial exports were Dar es Salaam, Mayotle, and Uganda. And it started with a capacity of 140,000 tons to increase to today of a capacity of 1.1 million tons.
We'll move on to the mission, vision, and values of our company, which include
To sustainably utilize our lands and to rehabilitate quarries. Well, our vision is to be a world-class producer to produce construction solutions to our customers in Eastern Africa.
to the management team.
So to the management team, we have Bruno Pescha as the CEO, John Simba as the chairman, Chris Kisare as the non-executive director, Sheila Bijiwe as the non-executive director, Ambassador Solomon Karanja as the non-executive director.
We'll now move on to the business model of our company, and first we'll begin with the industry of operation.
Okay, so the industry of operation consists of key activities like securing the Bamburi mining reserve lands and of course the sale of cement. We also have the housing estate management and quarry rehabilitation. So Bamburi rehabilitates quarries and comes up with new investments like the Hala Park, which is a park that earns the company a lot of revenue. Yeah.
To our subsidiaries we have
Okay, our subsidiaries, you have the Bamburi Special Products that deals with concrete paving blocks, Lafarge Ecosystems that deals with quarry rehabilitation, the Bamburi Cement Limited in Uganda that deals with cement production. Others include the Himkem Holdings, Diani Estate, Kenya Cement Marketing Limited, Portland Mines, and Serusi Management Limited.
Now to our competitors, we have East African Portland Cement, Athi River Mining. We also have National Cement and Savannah Cement. As we move on to the next slide, whereby we're going to show you the pie chart of the analysis of the market share of our company. So as you can see, Bamburi Cement has 56% market share as compared to East African Portland Cement, which has 28%, and National Cement Company together with Savannah at 16%. So from this we can see that many people prefer cement from Bamburi Cement because it has a larger market share, and this is a competitive advantage to our company.
Okay, in addition to that, Bamburi recently came up with a mobile banking app that allows you to buy cement right from your phone. You don't have to go physically to the point of sale places. You just use the app and you'll be able to get cement manufactured at your doorstep. It's called M-Service.
To our investors and major shareholders.
Okay, so we have Lafarge, which is a major shareholder at 58.6%, then Paramount Company Limited at 3.43%, Balobai Patel at 1.52%, and the rest. So those are the three main shareholders in Bamburi.
Yeah, moving on to our financial ratios. So we have the profitability ratios, we also have investor ratios, and finally, we have the debt ratios. So I'm going to begin on the profitability ratios, which are net profit, operating profit margin, return on assets, return on equity, and return on capital employed. Now we have assessed 3 years from 2012 to 2014, and at the average of the 3 years, net profit margin is at 11.52%, operating profit 25.74%, return on assets 11.15%, return on equity 12.35%, and return on capital employed 16.58%. As you can see, these are quite high, the ratios are quite high, so it shows managing its expenses well, hence it's able to generate high profits. So we'll move on to the investor ratios.
So investor ratios, we have the dividend per share, the earnings per share, the earning yield, the dividend yield, the price earnings. Yeah. So the investor ratios just show an investor whether or not to invest in a company. They show the revenue that the company earns from its investments. So we take the example of the price earnings from 2012, 2013, 2014. It has been on the increase, showing that the company is adding value to itself, because price earnings is gotten by the market price share over the earnings per share. So that means that the company's value is increasing over the years. Then lastly, we have the debt ratios. This just shows the liability of the company. And we see from 2012, 2013, 2014 that the debt has been increasing. But this is because the company has been involved in many investment ventures, therefore explaining the debt.
Yeah, so from our financial ratios, I'm sure you can notice that from 2012 to 2014, at 2013, there was a slight stamp in the financial ratios. And this is because the company had invested in various projects. For example, there was the installation of the 540 million bag filter to control its waste. There was also the petcoke fuel conversion project that the company invested in. And also those decreased exports from out of Uganda. So meaning the income that the company was getting was less. This in turn led to delayed payment of workers, and this in turn led to a lag in the construction sector. Hence, this led to major losses in 2013, but all hope was not lost, because at 2014, you can see there's a general increase in 2014 for the reasons that we're going to give you shortly.
Okay, so in 2014, we had the twin launch of the Olkaria geothermal plant in Kenya and Kasese, that's Uganda. So this project gave energy cost benefits in the second half of 2014 to Bamburi, explaining the increase from 2013 to 2014. You can see from the ratios that in 2012, we had the net profit margin from 13.02 in 2013, 10.82, and an increase in 2014 to 10.83. This is noted throughout in the operating profit margin, return on assets, return on equity, return on capital employed, all the way down to the earnings per share. Okay.
So we'll move on to our profitability and future profitability. So our net profit in 2012 was 4,882 million. In 2013, 3,673 million. And 2014, 3,903 million. And as of 2015, there was a 94% increase in pre-tax profit, 94%. This is a major increase to our future profitability.
Okay, so the turnover increased to 19.3 billion from 17.3 billion. This is as a result of improved market conditions in both Kenya and Uganda, following growth in the infrastructure segments. Then also the operating profit increased from 4 billion, from 2.2 billion to 4 billion due to increase in sales and cost initiatives made by the company.
So in the future, the profit margins are expected to rise because the governments of Kenya and Uganda, who are the major investors in the company, are undertaking key construction projects in their countries, and this will benefit our company, Bamburi Cement. So we'll move on to the corporate social responsibility plan. So as you can see, we have two beautiful photos here, and these are pictures of Hala Park. I'm sure most of you have been to Hala Park. It's a very beautiful place. We have diverse animals there, and this previously was an ugly mining site, but look at what my company has done to it. It has rehabilitated this quarry. I mean, it's very beautiful. This is the work of my company, Bamburi Cement.
Okay, so in addition to that, Bamburi invested in a 540 million bag filter in compliance to the global environmental standards. And this is very good because it reduces the emissions, so citizens are safe from the effects of pollution. And Bamburi also has a cement kiln that is the only NEMA-approved facility for burning of waste tires, and this also reduces the emissions that causes bad effects to citizens like you and me.
We'll move on to the recommendations that we have for our company in order to boost its performance. We'll start with the marketing.
Okay, so Bamburi should intensify its marketing plans. It should expand out of East Africa and move on to the rest of Africa, because we see it's mainly centered on Uganda and Kenya. So they should diversify their marketing plans so as to increase their markets.
And then moving on to the strategy to outdo competition, Bamburi Cement should try to sell its cement at reasonable prices so that the demand will go higher. As you can see, East African Portland Cement, the price of cement per bag is 740 kg. For ARM, 700 per 50 kg bag. For Savannah, 685, and Bamburi at 750. And these prices have gone to as high as 800 shillings per 50 kg bag. So our company should try to sell the cement at reasonable prices so that the demand can increase and hence generating higher profits. We'll move on to our recommendations on whether you should buy, sell, or hold shares in the company. So, as Bamburi Cement Precious Blood, we advise you to buy shares in our company. This is because, based on our financial ratios, which are from the net profit margin to return on capital employed, we see that return on equity, as I said earlier, is at an average of 12.35%, meaning the company is generating a lot of profit on the capital invested in the business. So you should invest in my company based on that. Then also we can look at the net profit margin, which is at an average of 11.52%. This means that the company is generating a lot of profit from its sales, so you should invest in my company. Moving on to the market share price movement.
Okay. So the market share price movement, we have a graph that shows the stock performance for the past 1 year. So as you see, the prices are relatively stable, ranging between 180 and 140, meaning the company shows a stable trend in the share price market movement, meaning that it's doing very well. If we could go back to our ratios, I could show you the investor ratios. Look at the price earnings again. So the price earnings basically tell the investor how much one can invest in a company to get back $1 of the company's earnings. And as you can see, it has been on the increasing, it has been rising with time. So that shows you that the company is doing very well, and you should go ahead and buy these shares, because based on our ratios and the market's share price market movement, you see there is an increasing trend, and this is a very good indicator that it's a company that's doing very well. Also, Lafarge recently made a merger with Holcim, so it's now Lafarge Holcim, and Bamburi, being a subsidiary, will obviously get benefits from this. As you've seen in our future profitability, there has been a great increase with the figures I gave you. That is just an indicator of how strong the future is for Bamburi. So we highly recommend you to buy Bamburi shares.
And then also the current share price of our company is at 179. Now, when you compare this to our competitors, East African Portland Cement is at 53 shillings per share, and ARM is at 39 shillings per share. So our share price is at 179, meaning that you'll get a lot of returns from this out of the dividends of the company. So buy shares from our company and you won't be disappointed. Thank you for listening. Bamburi Cement Precious Blood.
Thank you. Congratulations. And now over to the judges. I even have a dedicated mic.
Thank you. Good presentation. I have a question. Bamburi Cement's market share has been declined. Used to be 60. Now it's declined to levels about actually below 50. And this has largely been attributed to new entrants coming in, the likes of Savannah Cement, Mombasa Cement. Do you guys think it's a concern for Bamburi management?
Yeah, it's a big concern for Bamburi management that other cement companies are coming to the market, and I've shown you the prices of the cement for ARM. They're selling the cement at around 700, meaning more people will prefer to buy the cement from ARM as compared to Bamburi. So this is a great concern. And then also I have another pointer. We have Obanja Cement, which is the world-class producer of cement. It produces a lot of cement and it generates a lot of profit from it. So Obanja Cement is planning to establish a cement plant in Kitui, meaning the same strategies that they are employing in Nigeria, they'll also employ them in Kenya, and this is likely to outdo Bamburi Cement. So I think it's a major concern, but yeah, I'm sure they'll find a way around it.
Thank you. Another question?
Thank you, good presentation. You had mentioned that one of the strategies for Bamburi, or rather one of your recommendations for them to improve, is by them reducing their prices. My question to you, if they reduce their price of their product, don't you think the competition will do the same? In which case they may not increase market share or sell more.
So I think that by reducing their prices in the first place, before the other competitors start to reduce their prices, that will already create a high demand for Bamburi. So in our recommendation for reducing the prices, we are looking at it like if I want to purchase cement and I look at Savannah Cement having the lowest, I'll obviously go for that one because it's more economical. So by Bamburi reducing its prices, yes, the other competitors might also reduce their prices, but this is like a quick fix to the to beat competition at a go, like instant. This is an instant repair, but what you're saying is also true, though it's long term.
Thank you so much for listening.